as a profitable day trader, you have to consistently continue keeping up with the markets, because if you have the same strategy, don't ever tweak it, and you keep repeatedly losing and you just continuously use it and use it, then you're going to end up getting left behind and lose a lot of your money. So I primarily chose to trade the 2022 ICT mentorship strategy, right? I kind of figured it out within my own before even watching the video, before even TGR was trading it, before any other people were trading it. I was already on it, right? I knew what it was. I knew what a liquidity sweep was. I knew what a 1 minute break structure was, right? I would enter. The only difference is I would enter off the 1 minute break structure. I've been doing it for years now, right? I've been using that same strategy for years now, before I even watched ICT or TGR trades or any other traders that use that same strategy. But I have tweaked it a little bit now that has given us a better return, a better win rate, and a better risk to reward. I'm going to go over the trade that I won on Thursday when I used this strategy, and I'm going to go over the trade that I lost on Thursday by just using the basic 2022 ICT mentorship strategy. So, really quickly, we're going to hop on the 4 hour for the Thursday, right? So we're going to hop on the 4 hour really quickly. If it loads. Hello. Okay, loaded. We're good. So, Thursday, right? Pre-market, I saw we had this 4 hour break structure to the upside, but we also had this 4 hour fair value gap right here that gave us that bearish orders in order to push down and sweep liquidity on the lower time frame. Okay, so we're bullish on the 4 hour, right? We're just waiting for that lower time frame sweep of liquidity. So what did I do? Hop on the hourly, saw on the hourly, hey, we had that break structure to the upside. Then we also had this fair value gap that was yet to be filled, right? Including those that 1 hour fair value gap, we also had this hourly low, this hourly low, and this hourly lows. And on the lower time frames, it'd also be 15-minute lows. So lows to be swept, sell side liquidity, plus that hourly fair value gap is my basic entry, okay? So what did I do? Hop on a 15-minute, and pre-market open, right? This thing came up, swept liquidity to the upside, and then we had this like bigger push down right afterwards, right? After we had that push down, and this is what I was looking at, right? We saw that we had this push down, swept this liquidity, closed above those previous lows, right? It filled in this fair value gap, 50%, and that was me. That was all game for me. I entered off the 1 minute break structure to the upside, and I was ready to take that trade. And so many other smart money concepts traders took the same exact trade. Problem with that trade was that we swept buy side liquidity. We no longer had any more liquidity left to be swept. So what happened? Many of us got stopped out, right? So this is where my new strategy comes into play. Now, if we have the opposing area of our sell side, buy side liquidity, we have the opposing liquidity get swept. So let's say, or the opposing liquidity of our bias, right? So let's say that we have long bias, right? If we see market open, New York session open, we have this push up and that buy side liquidity gets swept, meaning it gives us less, like there's less orders there, there's less liquidity there to be swept or be collected, right? If that happens to us, what I want to see is I want to see sell side liquidity get swept twice, right? And then vice versa. Let's say that market opens and sell side liquidity got swept, right? Even though we have a bearish bias, I want to see a push up, buy side liquidity get swept once, and then I want to see it come up one more time and get swept, right? Here we had equal highs, didn't really sweep, but yeah, and then I'll enter my short position to the downside. That's my new strategy. That's literally the only difference that I have created between my strategy then and now, right? And it's given us a better win rate. It's given us a better risk to reward and a better overall trading experience. So, like I said, what did I do? After it created that low, swept liquidity or collected orders, I waited for that reaction, right? Then I waited for that push down, right? We saw a push down, didn't close below this previous low, push down, swept liquidity, actually swept liquidity, right? That was my entry. That's the entry that I took with you guys live on the Discord. My entrance was this retracement on the 1 minute fair value gap. Could go back to that real quick for you guys. That was Friday. So let's back up a little bit here, right here. No, actually, that's still Friday. Okay, there we go. Jeez, guys. Alrighty. This was my entrance right here. I saw that we had this push-up, break structure to the upside, first of all. Then we had another push-up, break structure to the upside, again, based off of these 1 minute lows. Let me zoom in for you guys so you guys can see better. We had this push-up, right, creating a break structure to the upside. This push-up right here, creating that break structure to the upside on this 1 minute fair value gap highs. After those highs, I waited for that push down. We saw this fair value gap on the 1 minute get filled, and that was my entry. That was my entry to take that long position. So what did I do? Entered off of that reaction, saw that it closed above, stop loss below that previous low, and that was all game. So what am I going to target now? Targeting the 5 minutes, right? Targeting 5 minutes first. Highs. So my first take profit was this previous high, giving us a 1 to 1.5, right? Or actually, no, it wasn't. It was this high. Sorry, guys. Giving us a 1, 2, 3 risk to reward. First take profit, okay? Then I target 15-minute highs. In this case, we were targeting these previous highs on the market, right? We're targeting these previous highs. And then we hopped onto the hourly to continue giving us more positions to take, right? Hourly was this fair value gap, and that was my last take profit off of that fair value gap. And as you guys can see, like, all take profits got hit, giving us a 1 to 7 risk to reward on that one trade, right? And that's my indices new strategy, right? And it also works really well on NASDAQ, because on NASDAQ we also took a long on NASDAQ. Let me open that up for you guys real quick. We also took a long position on NASDAQ where we had 2 sweeps of liquidity. I keep getting ads. I don't know why. I have the premium version. Anyways, here, based off of, was it this one? Thursday? Was this Thursday? Yes. We also took this long position on NASDAQ based off of, hey, we had a push down, swept liquidity, right? A lot of people took their long based off of this candle closing above these previous lows, and then they saw that reaction on the upside. They took their longs and got stopped out immediately. I was waiting for, like I said, sell side liquidity, get swept one more time, creating a 2-time sweep of liquidity. Why? Because we saw market open, we had this buy side liquidity get swept. So now we're waiting for double sell side liquidity get swept, which is exactly what happened. Now, cool. I have my bias. I am looking for longs now, right? Let's zoom out a little bit here. And we also have currently a what's called 7-day free trial on my Discord, where you can enter for free for 7 days and see the results, see progress, see how good my trades are, and I guarantee you guys won't want to leave after you see how good it is. Anyways, so like I said, we had that double sweep of liquidity. We saw that push up. This was optimal entry right here off of this 1 minute break structure and fair value gap getting filled. But this was the second re-entry where I told you guys, hey, this is going to work. You guys can take it off of this push up. And many of you guys did. That's the entry that I gave you guys, right? I ended up taking that first trade based off of this fair value gap right here getting filled. That was my entry, right? Stops below this previous low. And like I said, boom, right? First take profit was this previous high, which is a 1 to 3.5 risk to reward. Anyways, that is the new strategy. I kind of simplified it, gave you guys a better script on it, gave you guys a better explanation. Basically, if your bias liquidity gets swept, so let's say you're looking for longs and you see your your buy side liquidity get swept, then you want to see 2 sell side liquidities get swept before you take that long position. And let's say vice versa, right? Let's say that you're bearish on the day, and let's say that market opens and you have sell side liquidity get swept. you want to wait for your market to come back up, sweep out buy side liquidity, create a new high, right? And then see that buy side liquidity get reswept, giving you that bias, and then you can take that sell position. Also, if let's say market opens and it goes with your plan, let's say that market opens, you have long bias. If market opens and then you see push down, sell side liquidity gets swept, 1 minute break structure to the upside, and all that good stuff that you enter off of, then you're cool. It's fine. You don't need to wait for a second sweep of that sell side liquidity. It only happens if your bias liquidity gets swept, and it's really that simple, right? Like I said, though, I also have a 7-day free trial on Discord that you guys can go ahead and claim, right? And see me trade live, have a better feel for my strategy, and even have a chat with the people in the trading community. We have a really great trading community. Everybody's really helpful. Everybody's really nice. They're still not profitable yet, right, like me, but they're getting there, and I genuinely love my Discord, right? You guys are really great, and I'm going to leave you guys with that. Peace.